Welcome to a special edition of Northern Business Leaders in association with the professional services firm Deloitte. This edition is being recorded in summer 2021 at Holt's Yard, which is a really great working space north of the River Tyne in Newcastle. Today we're going to talk about Fintech in the northeastern Yorkshire. Recently this report was published. It's the Khalifa Review into UK Fintech. It contains a 5-point plan to grow the sector and take advantage of the UK's 10-year record of achievement. Among other things it says is that Leeds and Manchester represents an established large cluster of UK fintech that deserves further recognition, and that the Northeast is emerging as a specialist cluster in banking, payments and wealth tech. I'm joined by people who understand and can tell us more, including fintech specialist Chris Wildsmith, a partner at Deloitte in Yorkshire and the Northeast, Peter Bould, Head of Corporate Affairs at True Potential LLP, and Dawn Dunn, a fintech specialist at the industry cluster group Dynamo. Well, we've moved inside Holt's Yard, very trendy, nice space, bare brick, all refurbished, lots of great companies, many who are in the fintech sector and are interested in this report, the Khalifa Review into Fintech. Chris Wildsmith, you're a partner at Deloitte. Now, this report says of fintech, it's not a niche of financial services, nor a subsector, but a permanent technological revolution about the way we do finance. What would you define as a fintech business?
I think fintech's quite a broad church, really. So, if you cast your mind back 5, 6, 7 years, I think a lot of businesses were technology enabled, delivering financial services. I think what the Khalifa Review recognises is that there's been a fundamental change in the way that financial services are being delivered, and also a proliferation of businesses that provide services into the value chain using technology as an advantage. And I think it's that fundamental shift in the way that technology is being used and placing it at the heart of financial service product delivery and processes that is the really exciting thing about fintech at the moment. And
I explained that the north of England is actually at the heart of fintech. It's really rising in this region.
Absolutely. I think there are a number of established businesses alongside the scale-ups that are coming out of the Newcastle Durham cluster. The Khalifa Review recognises the emergence of that cluster as being, one of the major themes, I guess, in the expansion of UK fintech. So the region's got a really strong position across the sector, and there's some great businesses in there.
Dawn, you work with Dynamo, this fantastic industry group in the Northeast. Tell us a little bit about Dynamo and what you think has made the Northeast such a good cluster.
Essentially, Dynamo is a technology network. It deals with all different sectors, but fintech was recognised as a real growth area several years ago. And as we started to grow the cluster, it became apparent that actually there was even more than we initially thought. And as Chris says, fintech is very broad church, so that encompasses, across our 160 members, it encompasses insurtech, it includes mobile banking, it includes startups, but it also includes some real stalwarts like Sage, Newcastle Building Society, and their technology on Newcastle Strategic Solutions.
Let's move on to a case study. Peter Bould, you're with True Potential. Look, before we get into the detail, I've got to hold this up for our viewers. Look at that graph. That is the growth of True Potential. What does True Potential do, and what are its key numbers?
Well, absolutely, Graham. I think actually what that graph shows is that in many ways we've just been quietly getting on with being a financial services technology-driven company since 2007, if you trace that graph back. So in many respects, the revolution that's happened in fintech and wealth tech has almost happened alongside us. I'd like to claim, of course, that we knew that there was this revolution coming, but we've just been getting on with our business for 14 years. But the numbers you're talking about, there are 3 divisions to True Potential, for those who don't know. We've sort of got our traditional advice department, which is about 800 advisors across the country. There's then a back office providing services to financial advisors, technology back office services. And then we've got something called True Potential Investments, which is our platform and our funds. And if you take all of that together, that represents about 20% of all UK financial advisors. The numbers that you're looking at, that we have about 60 billion pounds of assets under our administration, and 17 billion of those is on our own platform. And of course, we're adding about an extra £1 billion of assets coming in, people's savings and investments, about another £1 billion every 2 months. So we're doing great and continuing to grow very, very fast.
Okay, well, we'll come into a little bit more about what you do and some of those numbers in a few minutes. Chris, though, this Khalifa review we've been talking about does make a lot of recommendations. Not going to talk about all of them, but let's just touch on two recommendations: skills and connectivity. Skills first, because the report says that we might need to have new visas to import skills into the UK. That, of course, is one way of doing it, but there's also training. Where do you see the skills requirement in the North East and Yorkshire?
I think across all of the clusters, we have to recognise that we're doing something right. So, the fact that we've got 10 established or emerging clusters across the UK, and there are specialisms emerging within each of those clusters, shows you that you're getting the critical mass of people. You're getting this, the right strength and breadth and depth of people to support the entrepreneurs who've come up with the initial idea. I do think, though, that when you're thinking about resourcing skills for the future, it needs a joined-up approach. So public sector, private sector needs to work with academia to make sure that the universities are producing graduates with the right skills to support the development of the local clusters. The report talks about effectively a visa stream to bring talent in from overseas. And again, I think when you're talking about making or maintaining the position of the UK as a global leader in fintech, it seems obvious to me that you want to bring in the best talent from overseas. And you want people to relocate their businesses over here. That I think helps benefit the existing clusters in the way that they're set up. But it's that sort of virtuous circle, I think, of bringing in the right skills, getting people to move their businesses in, and training people for the future that we really need to make maintain the critical mass that we've got in fintech.
It also talks about connectivity and nurturing these clusters. And also the creation of something that would help the connectivity, something that the report describes as the requirement of a Centre for Finance, Innovation and Technology, or CFIT. Do you think that should be a proper established agency of government?
Yes, I think the opportunity we've got at the moment is, when you look at the way each of the clusters are set up, there are varying different levels of collaboration, coordination, and I suppose infrastructure in place. There are national bodies like Innovate Finance, there are local bodies like Fintech North, all playing different roles, and actually across each of the sectors there's quite a fragmented approach. There's limited consistency in the roles that organisations are playing, and many of them are funded by donations or sponsorship. So I suppose it has lacked that national coordination. I think the benefit that an organisation like CFIT can provide to all of this is it can monitor, maintain, help the clusters with their strategies for their own development. It can take learnings from best practice across each of the clusters and share that for best practice and benefit across the piece. But it does need the right structure, it needs the right mandate, it needs the right people, and it will need the funding to have a meaningful impact on national fintech development.
And government does it in other areas. In the northeast of England, there's the driving electric revolution that is helping electric vehicle, and that's coming out of Newcastle University, but around the country and funded by government. Let's look at what you think on this, Dawn, from the industry perspective. Dynamo, do you think that this CFIT idea, the Centre for Finance, Innovation and Technology, is a workable potential agency, and where should it be located?
I think it's really important, and I think it's the I in the CFIT that is the most important factor. Innovation is at the very heart of fintech, and here in the Northeast it would be, in my view, a very good fit, because we already had the National Innovation Centre for Data, we've got the National Innovation Centre for Ageing. I think if we could have a centre for financial technology in the northeast of England, it would be a very good fit because of the skills we've got here. We've got 5 fantastic universities. We've got a wealth of businesses who can mentor and take people under their wing to develop those skills, because, as Chris rightly said, skills is really, really important. We need to have a strong agenda on that to make sure that we've got the workforce to keep up with the ideas and the innovation that's happening. So I think the Northeast is well placed, and I think Dynamo is very well placed, because that is actually what we do. We are at the centre of connecting the private sector, the public sector and academia, so that they not only hold each other to account, but they also give each other a leg up to make a really sound offering.
And I suppose feed off ideas, and that's the sharing of ideas, whilst you wouldn't want it to be on the basis of cartels or restrictions, can also lift an industry. When I was looking at the data, it suggested that in areas where there are clusters, there are 25% more people employed and pay is 11% higher. You've got your own cluster. Lots of people work for you at True Potential. Do you think that that is true, where you have a cluster, you lever up the rest?
Well, it can only be good for the region and the sector as a whole if we've got this kind of investment and the kind of collaboration happening. I mean, I guess from TP's point of view, we probably have almost got to where we are without that happening. And what we had to do a few years ago, we used to have, I mean, the universities are great, and of course they produce great candidates, but what we had, an issue we had a few years ago was that the students coming out of the universities, the language they'd learned to code in was not the language that we were using. They were just a little bit behind the curve on that one. I think it's all sorted out now, but what we had to do by necessity was develop our own True Potential Academy, where you could take people in who perhaps didn't have the skills and train them using the experts that we had on the job to be able to upskill themselves. And actually we've broadened that out now, so that covers development and IT, it covers marketing, it covers production, financial advice obviously. But we've actually expanded that now, so you can come into TP with absolutely zero experience at all, or come in doing one job, say on reception, and within 12 months you could be learning how to code and develop apps, and doing that all in-house, so that we know that the skills people are picking up are the ones that we actually need.
So that flat structure with very little demarcation and an emphasis on innovation and creativity and collaboration, that's the modern way you see it going?
Completely, and as I mentioned a few minutes ago, we've completely redeveloped our head office, which was very modern but traditional in the way that it was laid out, banks of desks and all the rest of it, but now completely rethought the purpose of a head office post-pandemic into much more open space for collaboration, ideas sharing, video conferencing. Gone are the banks of desks, and now much more open space, and that's very much with this eye on working with external partners and internally to get people thinking and idea sharing, and then of course blending that with the skills to take ideas and develop them very quickly. And
that's been validated. I noticed you got a 5-star rating from the FT, and there's I explain more, digital process champion by a trade body?
Well, absolutely. I mean, and this is all actually came about because of the pandemic. Of course, we went into March last year, and whereas a lot of, I suppose, slightly more old-fashioned paper-based financial, we probably all had the issues dealing with banks and insurers where you just couldn't get through to people. And we had none of that because TP was founded in a very much a digital fashion in 2007. It was all what we call a digital-first approach to the way we go about our business. So switching to remote working was no problem. We were able to bring forward ideas that were in the pipeline. But the net result was that we had no interruption in service. We could provide, actually we fast-tracked ideas for our financial advisors and clients. And yes, you're quite right, that resulted in us sort of being named a digital process champion. We had very little, we have very little paper-based processing. I mean, there is still a bit of that because some clients like to send a check in the post to be invested into their pension or ISA. So you've got to have the capability. But of course now most people would do everything on their phone and their iPad.
There's some data I picked up from your business about the digital transactions from that point of view. There were nearly 200,000 processed online. But what was interesting is that your clients logged in 3.6 million times over a year just to look at their investments.
That's it. I mean, interestingly, the concept of True Potential, if I go back to 2005, 2 years before we were even founded, the founder's idea was that you'd be watching, say, Channel 4 News or BBC News on the television, and alongside it you'd be able to split the screen, and you'd have on the one hand the news broadcaster telling you how the markets have done or how some event has moved markets, and simultaneously you could pull up your portfolio and see how your portfolio was affected. The only thing that didn't happen was it wasn't through television, because of course the iPhone came along a couple of years later, then the iPad. But the concept is still the same, that you can log in on the go, check how your portfolio is doing, make some adjustments. Your advisor's got full oversight of that. They can be providing that advice without having to come to your house. And it's all 24/7 as you want it, which is very different from a statement in the post once a year.
Absolutely. Chris, you've heard the potential as described by True Potential. That's how it could be. But of course, it needs money and it needs nurturing. And this report talks about how the Financial Conduct Authority has had a sandbox approach. I'll ask you to explain that, and wants to go to a scale box approach, and it also talks about expanding EIS. So let's talk about that. How can the financial regulators help to make the investments for people starting and generating these businesses easier?
Well, I suppose if we start with the sandbox idea, I mean, I think that's been a real success story of the way that UK regulation has evolved for the fintech sector. So, the rule books around operating as an FCA regulated business are complex. There's immense amounts of detail, and people need a lot of advice generally to navigate their way through that. And I think that can be quite off-putting for entrepreneurial businesses. And you know, in extremis, if business models are set up without regulatory compliance at the heart, it can store up problems with quite significant financial bills attached for the future. The idea around the sandbox was a much more collaborative, safe place for early stage fintechs to effectively test and develop their business model in collaboration with the regulator. I think what the Khalifa Review recognises is that as those businesses get bigger, it is desirable for that principle to be extended, and the idea around the scale box is that it removes the time limits that sit with the sandbox idea, and I guess it's a tool around enablement for scaling up, taking the barriers and the complexity away. And then I suppose thinking about that in the second part of your question, clearly development and growth finance has been a fundamental challenge for many scale businesses, whether they're of a fintech nature or not. For me, the access to advice and the access to finance are probably the two biggest obstacles to getting a business to scale. I think it is relatively common for early stage businesses to be going through endless rounds of seed and series funding, and it can be a full-time job for many people in the business. These are pre-revenue, pre-profit businesses in many cases. They probably don't have the financial resources or team size to be able to navigate that, and that inevitably means that some businesses will fail before they've got to fulfill their potential. So I think ideas around getting easier access to angel, VCT, EIS funding is really important. Similarly, enhanced R&D tax credits have a role to play. I think there's a bigger challenge though around how we get businesses access more easily to broader levels of growth funding, and I'm not sure the recommendations necessarily address that. I guess to provide a parallel, the government is setting up the National Infrastructure Bank, headquartered out of Leeds, and the role of that organisation will be to provide funding for green projects, net zero pathway initiatives that maybe can't get commercial funding. I'd like to see something similar rolled out to help the early stage fintech businesses equally get access to funding and support their development and viability.
Dawn, let's just talk about the North East. You heard Chris there allude to the National Infrastructure Bank in Leeds. I think Leeds and Manchester have got their own critical mass, really, when it comes to financial services, particularly in Leeds. But in the North East, sometimes we've got to shout a bit to get our message across. And with Dynamo, you've got a few really great case studies. You've heard about True Potential, but what about Atom Bank, which is specifically named in this report from Khalifa?
Absolutely, and Atom was the first mobile-only bank, which is a nice little feather in our cap, and that has evolved over the years to where it is now as a bank that would pride themselves on a superb customer experience. They've kept their costs low all the way, and they've now actually migrated their technology estate, so they've got some really cutting-edge technology in there. And I think that one of the examples of that is something that Chris alluded to there. It's the agile approach, but being able to operate within a regulatory framework. Fintechs, because they need to be regulated, because this is so important, you can't kind of pop them out overnight. So the regulator having a more agile approach and allowing them to innovate within that regulation, I think is very important. And we've seen Atom go on that journey and take their customers with it. And that's a real beacon of success in the North East.
And Dawn, I'm going to give you the last word, because you have this industry group Dynamo, which goes beyond fintech, and I've got it right, you've got several hundred members and they employ several thousand people. Talk to me a little bit about Dynamo and what you see as the North East's key digital attributes.
Well, Dynamo founded what Fintech North recognised as having the only fintech cluster in the North East when they started looking around and seeing what was already there. And they came to the North East and they said, this is fantastic. You've already got something here that we can work with. And they operate on a national scale. I think one of the important things about the North East and where it is, actually, we're in a very significant talent and business corridor between Manchester and Edinburgh, both great centres of financial technology alongside Leeds, which has always been a strong financial centre. But what Dynamo did was bring together the North and be able to sell that message not only to the audience in the North, who often are so busy with their heads down working on what they've got that they don't recognise what's outside, but also to take that message wider. Dynamo, as you pointed out, is an organisation for the larger technology sector. So we not only have fintech, but we've also got clusters in artificial intelligence, in data, which again underwrites and is the fuel for the whole financial technology cluster. And we've got a really strong sector in healthcare and health tech. And we've got in the northeast again, you know, National Business Services Authority. We've got lots of other health tech businesses that are also members of Dynamo.
Well, Dawn, Peter, Chris, thank you for joining us, and thank you for joining us on Northern Business Leaders in association with the professional services firm Deloitte.